So in this video, I want to actually talk about how to actually research stocks. And if you're a beginner, this is going to be really, really helpful for you. And hopefully I'm going to make you millions and millions of dollars over the course of your lifetime by doing this. And, if you want to understand who I am, I'm actually Professor Dave Massac. I'm Associate Professor of Innovation Strategy and Entrepreneurship. And I created this whole reciprocity project to give back as much as I possibly can. There were so many people that helped me out that I want to pay the favor for to help you out as much as I possibly can. So I created a sharing economy editing platform. You could check that out. But, I'm doing all of this kind of stuff because I want to make sure that you are very successful in your life. And I've learned a lot of stuff. I've taken graduate courses, doctoral courses in finance. I've taken a bunch of courses in economics. I've taken a bunch of courses in business and management. And, I teach courses at the doctoral level on innovation and entrepreneurship. I'm going to tell you this right now. The best thing that you can do ever for researching stocks or making money or anything like that is to not do it. It is going to be a disaster if you do that at this moment. Don't do it. But what I'm going to suggest for you to do is just do something that I personally do, and I'm doing okay with it. Actually, we're doing okay. We're probably well above average in terms of what people actually have in their investments. And, in 10 years, I expect to be much more well above average. And it's really, really, really simple in terms of thinking about this. So first of all, do not day trade at all. Don't do any sort of day trading stuff. Don't buy single stocks. This is going to be dangerous for you and you're going to lose a lot of money. And I know some of you probably will make a little bit of money in the short term, but that's gambling. And I am not going to ever tell you to do that. What I'm going to tell you to do is to look for long-term value. And how do you actually look for long-term value? So for me personally, what I like to do and think about is actually investing in the economy. I don't ever look for quick wins in any sort of way. I don't think that this is kind of like sneaky business or anything like that, right? Like there's no Bitcoin investment. There is no, there's no investment that I would ever put my money on other than just the good old, economy, so I'm in America, good old American economy, but it could be the global economy. It doesn't matter. What I'm looking for is long-term value. And what you're looking for is these long-term fundamental trends in society. And so for that, the best thing that you could do is just get mutual funds and look for, really good mutual funds that have a long track record, and they've been around for a long time, and they're investing in legitimate, real good companies, ones that you will recognize as like, this is a real good, stable company, like Apple. A few years ago, General Electric. All of these kind of companies like that, IBM, or maybe it is some bank like RBC Bank, all of those kind of things. And the reason is that companies go bankrupt, they become a big thing for a little bit, and then the vast majority of them actually just kind of exit out of the market. And there's a lot of reasons why this happens. Tons and tons of reasons. I actually study learning from failure with companies, and there's tons of reasons why this happens. But the fundamental thing that you can do, you can't sort of predict what those things are going to be, but what you can do is buy a basket of all of those different companies that are going to do well. And so I never worry about my mutual funds. I never worry about my investments, but I invest all the time. Every single paycheck, a chunk of it goes into, I take about 15%. Goes into actually it's more than that, actually substantially more than that, but it's always going and investing in these mutual funds, and I'm not looking for anything that's sort of sneaky or anything like that. This is not an endorsement in any sort of way. I do American funds for some of them. It doesn't matter which ones they are. What I do is I just look for ones that are doing really well and they're pretty trustworthy and they've been around for some of for a long time, and we just use those ones, right? And you just invest in those clusters of stocks. Don't ever invest in any sort of day. So why don't you want to invest in day trading? So day trading actually fluctuates a fair bit. And it's not the fact that it fluctuates. Actually, you could do well when sort of there's fluctuations. It's because that there is really, really smart people out there, smarter than me, smarter than you, smarter than all sorts of other people, because they have these huge, enormous resources, and then they put those they've got a combination of both computers, machines and stuff. There's a great book out there, and I highly recommend for you to read it. It's called Flash Boys. And they put all their money in those things, as well as they get this really strong competence of people, a cluster of people that are paying attention to that kind of stuff. So anything where there is an undervalued asset that is in any stock market, it's pretty easy to identify those things with machines. Very easy to do that kind of stuff if you've got the resources to do those kind of things. But what is tricky is looking for those long-term things that people don't behaviorally actually want to do, right? So looking for the long-term trends where you are investing in the economy, that's actually hard to actually do behaviorally, to invest when things are fluctuating all the time and you're kind of freaking out and you're not trying to make any sort of money on that. That's why I don't pay attention to it. I don't want to actually freak out and feel that sort of I don't know what I'm doing kind of thing. And you're going to feel like that. If you're doing day trading, it's going to fluctuate a lot, but also it's incredibly hard to beat the market because you've got suppliers and buyers, right? Or you've got sellers and buyers that are in the market, right? So if somebody sees something, one person, that's it. One person out of thousands of people that are paying attention to it sees an investment that's undervalued, they're going to buy it. They're going to go in and buy it, drive up the market, and all of a sudden the price is what it's worth. But if you are investing for the long term, that's not going to happen, because what you're investing in is actual true value in the economy, right? So why don't I invest in single stocks? Again, it's because it fluctuates a lot. But I can't put my finger on which company is going to be really good. It's very hard to sort of figure out what company is going to be really good. So I would have said 5 years ago, General Electric would have been really great. General Electric has tanked in recently in recent years because that they had management problems and things like that. Google might tank, or Alphabet might tank in a few years because of something might happen. Or Facebook might have to get split up. If I invested in Facebook right now, there's talk by the SEC and the U.S. government to sort of divvy up or make sure that Facebook is that it's going in different directions than what it currently is right now. So if I would invest in it and say I'm going to invest in Facebook because I think it's great, I don't know what's going to happen with it. So I never ever do that. It's going to be not worth your time and effort, and you're going to be stressed out by doing that. I'm going to beg you not to do it because I want you to actually make a ton of money in the future. And that's what I actually do, other than this whole reciprocity project, but it's such a tiny part of our family income. It doesn't matter. Our family sort of wealth, it doesn't matter at this moment. It's pretty irrelevant, and it's more, for me, it is like a charity thing where I am giving back. It's not to do with any sort of like, I'm going to become rich and all that kind of stuff. No. Don't ever do that. What you want to do is just look for plain old mutual funds that do really well. Either mutual funds. The reason why I say mutual funds is because they've got like, I've got somebody that I refer to. They've got like people that you can refer to. If you want to be a little bit more sophisticated, just get index funds on Vanguard. That's all we do. Or something like Betterment or something like that, where you just get like some basic Vanguard index funds or index funds, where you are just, what that is, an index fund is just a collection. All they do is a company will go, so Vanguard will go and try to match the number of stocks that are in the stock market. So they're going to try to reflect the index of the stock market. That's hard to do. There's lots of sort of ins and outs and nuances with all that kind of stuff. But they try to match it as best as they can to see, and you're just tracking the stock market. Because it's really hard to ever beat the market. It's really hard unless you've got some information that nobody else has, but that is incredibly hard to do that. So it's even like with this reciprocity project, you see I'm doing all these YouTube videos. So if I start doing really well, what's going to happen with that? It means that other people are going to want to follow and enter the market. And then all of a sudden my competition is there. And it's much harder for me to do anything when there's that competition there. And all of a sudden the value gets depleted. So what do we actually teach in, business school and, making sure that you actually do really well is you've got to look for companies that not only are sort of fundamental trends in society, but, maybe that there is some healthcare thing that we're going to experience in 30 years, right? Like not right now, in 30 years. Maybe that there is some new technology that is really taking off in 30 years, right? Like it's not, so the internet, I would bet on the internet. I would be okay with that. But then you have to look for companies that are being managed very well. What are those capabilities? What that actually looks like? And that's really, 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 really hard to figure out what companies are being really managed very well. You can go to school forever to try to figure this out, and it's still not going to be that good for you. I went to school for like forever. I got an engineering background. I've got a master's in management science. I've got a PhD in business administration with a bunch of finance courses and stuff and strategy and all this kind of stuff. I don't do it. It is going to not work out for you. If you want to have fun and you want to actually just play, and this is your hobby and this is your thing, you take such a small fraction of your total net worth that is peanuts. It's like, let's say you've got $100,000 that you have in your name that you have access to. Then you take no more than $100. That's it. And then you play around with trying to figure out what's $100. Like maybe you invested in your friend's company, or you're invested in something else or whatever. That's what you do. And then maybe once you get $1 million, you take $1,000 and you take that $1,000 and you invest it in your friend's company or whatever. You don't want to ever get there. Don't do it. So that's all I'm going to say here is if you're wanting to research stocks and you're a beginner, don't do it. Get mutual funds, get an index fund if you want to, and just sit there. That's it for a long time. Continuously invest 15% of your income, total income, and you do that day in and day out and day in and day out. And I guarantee you by 10 years out, by doing that, if you've started doing that now and you do that now until 10 more years, you're going to have a big chunk of money. You do that 30 years, you're going to have millions of dollars in your bank account because of just the way that the stock market plays out. There's always 8 to 12% return every single year. And you have to sort of bet on that is going to happen. And what you're betting on is the economy continuing to grow. And I can't see that changing in the future. So if you like this, give me a thumbs up. Do subscribe to the YouTube channel. Take care and have a wonderful day. Bye.